Hello, bulls. Hello, bears. Welcome to another episode of Stock Rumors. If you haven't subscribed yet to my channel, I suggest that you do so that you can benefit from my videos. Today, I will tell you something that might sound shocking to some of you. Some of you might not agree with what I'm about to say, but here we go. It doesn't matter how many breaking news you hear. It doesn't matter how many reports you read. It doesn't matter how many charts you study. No one knows the direction that a stock will take. I repeat again, no one knows if a stock is going up or down. It doesn't matter what you read. It doesn't matter how many charts you study. No one knows the future. Okay, I will give you an example. Very simple example. Okay, look at this. I can give you a pattern of numbers. 10, 20, 30, 40. What comes next? If I give you that pattern, 10, 20, 30, 40, what's the next number? Would you say it's 50? But what if it's 30? No one really knows. You could guess, all right? You could guess, but no one knows. I will give you another example. Very simple example. Everybody knows. You flip the coin 10 times and you get heads 10 times in a row. What comes next? If you flip the coin again, no one knows because each flip is different. Okay, it has the same probabilities, 50-50. Okay, so you could read something and you say, well, tomorrow the stock is gonna go up, and when you check, it goes down. Why? Because no one knows the collective action of millions of people. It's impossible. Now, what do? Something that you could do is look for resistance and support, right? But at the best, at the most, you're still guessing because it could break, it could break out and it doesn't matter. Okay, support and resistance doesn't mean that the stock will stop there, right? It doesn't matter. But that's a good, you have better probabilities if you could say, but still in reality it's 50-50. Okay, but that's the best you could do. Okay, if it hits resistance, you can buy puts, right? You could try to short the stock. If it hits support, you could buy calls and expect that it's going to go up from there. But that's the best you could do. No one knows the direction that a stock will take. So what do? What you have to do, you have to come with a risk reward factor. And let me tell you what I mean by that. When I make a trade, I don't allow myself to lose more than $100. I buy a contract, I don't allow myself to lose more than $100. If I lose more than $100, I sell, I get out of the trade. I take the loss, I get out of the trade. And I wait for the stock to make another move, to give me another confirmation. So my risk is always $100. I am willing to lose $100 at every trade. What I'm doing, I'm reducing my risk. Okay? A flip of a coin. I will only risk $100. Flip a coin, $100. Flip a coin, $100. I will only allow myself to lose $100. That is my risk factor. Now, I also take profits quick. That's what I do. Okay. And usually I aim for $200. So at every trade, every contract, I usually buy a calls contract at support, right? Usually I do that at the lows of the week, or if it's hitting an all-time lows, I usually buy calls at that time. Now, could it go even lower than that? Of course, because no one knows the direction that a stock will take. But I'm trying to reduce the risk. Now, when it hits an all-time high, I usually buy puts. I short the stock. Why? Because I think that I have better probabilities that the stock will go down from that point on. But I could be wrong. It could even go higher than that. But I cut my losses at $100. That is my risk reward factor. But if the market gives me a $200 profit, I sell. I take it. I don't care if the next day it goes up to $1,000. I don't care. I don't ponder too much on the fact that I could have made another $800. I don't care. I will look for another opportunity. I will move on. So my risk reward ratio, that's what I do. I don't allow myself to lose more than $100, and I usually sell and take profits at $200. If it goes higher than that, I might buy the stock again, and I will use the same risk reward factor. I always take profits because that's what a trader does. I buy stocks with the expectation that it will go up so that I can sell and make a profit. Okay, I don't wait for it to go up to $1,000 and then the next day it goes down and boom, there goes my profits. No, I take profits. That's what I do. Okay, you might have a different risk reward factor. Maybe you allow yourself to lose $400 because your account allows for that. And maybe you expect the trade to give you $1,000 every time, and that's what you do. And that's your risk reward factor, and it might work out for you. But still, no one knows what the next flip is going to be. It's always 50-50. And I'm willing to take those odds. I like those odds 50-50. But no one really knows. So if you don't know the direction, even in a bull market, you don't know. Look at the coronavirus crash. It was almost 11 years in a bull market, and boom, look what happened. Because no one knows. Okay, so, you might not agree with this. You might have different techniques. This is the one I use, and it works for me most of the time. Okay, and I take losses, a lot of them, but I cut my losses early and I take profits early. But of course, the ratio is like 1-2. That's what I do. Okay, if it keeps going up, I buy it again. But I usually wait for the stock to go down, because in reality, nothing moves in a straight line. We all know that. The stocks doesn't really go completely down in a straight line, and it doesn't really go up in a straight line. You usually have, pullbacks. So, I don't care about missing out. I care about taking profits and reducing my risks. That's my suggestion. If you have a different technique, please let me know in the comments below. If you haven't subscribed yet to my channel, Stock Rumors, I suggest that you do so. Watch my other videos, different techniques, and I'll see you in the next one.